Bismillah Rahman Rahim. Assalamu alaikum students. This is Salah Arab, your accounting instructor. Today we are going to discuss the last type of error which does not affect the trial balance, which is compensating error. If you haven't subscribed the channel yet, please subscribe the channel and press the bell icon so that you would be able to receive the videos in future as well.
All right, so let's move on to the last error, which is not revealed by the trial balance. This is known as compensating error. But this error is slightly different from the previous errors we have studied. In this error, two or more errors cancel each other out. What does this mean? It means to say, up till now, we studied about error of commission, error of principal, error of complete reversal, error of original entry. In all these, basically, transactions were the same, and due to those transactions, only on that one transaction, certain errors were made, or certain errors were occurred due which we had to change, which we had to rectify. But in compensating errors, it won't be only one error. Two errors in different places had occurred. Two errors in different places had occurred, due to which they both cancelled each other out and the trial balance did not affect. For this compensating error, remember the two words overcast, undercast. Overcast means that you added the amount wrongly. Undercast means you subtracted the amount wrongly. Overcast is also known as over added, and undercast is also known as under added. There won't be under subtracted, under added, right? Remember these two words. Now, like I said, in compensating errors, two different errors which were taken place in a different transactions, they were made in such a way by chance that they cancelled each other out, and due to which there was no difference in trial balance. The question arises, yes, and how could it be possible? It looks very unacceptable. But see, due to the workload, the accountants sometimes make these errors. If I give you an example, I ask you to study for 7 to 8 hours. After 7 to 8 hours, you will not be able to solve a simple mathematical question as well, because you would be exhausted. So while working 8 to 10 hours, an accountant can also be exhausted and can have, maybe he may be having some domestic issues as well. So he was quite in depression, and due to depression, he may have had two different errors. But those two different errors, by coincidence, by chances, did not basically affect the trial balance. They cancelled each other out. For example, if I'm not giving you the example of OEC right now, for example, as you know, in trial balance, debit and credit have to be balanced, equal. Let's say at one place the purchases was overcast by 1000. It means it was over added. We added additionally, or we wrongly added 1000 in purchases. Let's say the total purchases was supposed to be 59,000, the total purchases, but we added one more thousand by error, due to which it became 60,000. But how much amount had we added? 1000. So by 1000, the purchase had been overcast or over added. It was written on debit side. On the other hand, the sales was also overcast by 1000. That was another transaction. Purchase was another a separate transaction. Sales was a separate transaction. Now see, sales, let's say the total sales was 43,000, and we added one more thousand by error here, due to which it became 44,000. But we got to know that in this 44,000, 1,000 was overcast. Now see, on debit side, 1,000 was overcast. On credit side, 1,000 was overcast. Debit and credit became equal. So they were two errors which compensated each other out. Which compensated each other out. They compensated in such a way that the debit and credit became equal. If I give you one more example, another example is, let's say the purchase was overcasted by $100 on debit side. The purchase was overcasted by $100 on debit side. In the same manner, the purchase return was also overcasted by $100. Now see, purchases were different. Purchase return was also different. Now these 200 and 100 compensated each other. Debit and credit were equal, so the trial balance did not affect. I give you one more example. Let's say the purchases was undercasted. When the purchases was undercasted, it means we wrongly subtracted an amount from purchases. So purchase was undercasted by $100. On the other hand, on the other transaction, on the other side, which is not related to this transaction, there was another transaction in which the sales return was overcasted. The sales return was overcasted by $100. Now, if you look into that, both are different transactions. They are not similar transactions. Purchase had another transaction, sales return had another transaction. But purchase was undercasted by 100, so it was on credit side. Sales return was overcasted, it was on debit side. So both amounts were equal, debit and credit were equal, and by chance it was a coincidence that trial balance was balanced. But we need to rectify these errors. How could we rectify the error? So first of all, this one. If I talk about this error, because sales return was overcasted, we need to reduce it. When sales return is reduced, it is recorded on credit side. I'm talking about the correcting errors. Correction. So the sales return was credited by $100 because it was basically overcasted. So we wrote it, or we minus $100 from here. It became zero. On the other hand, the purchase was undercast. It was under added. We subtracted $100 from here. So we will have to add only $100 here. So the purchases will be increased by $100. Right? Let's have an example of this one. Purchases and purchase return. Now see, the purchase was overadded and purchase return was also overadded. They both were overcasted. Right? In your compensating question or transaction, this overcast and undercast would come. And it is not there that only overcast will be there or undercast will be there. Anything could be asked. In this transaction, purchase was overcast, overadded, and purchase return was also overadded here. So we will have to under add it. But when purchase return is under added or when the purchase return is increased, it is recorded on credit side. Now we are decreasing it. So when we decrease it, the correction or the corrected entry would be purchase return debit by $100 and sales was the purchases was also overadded. We have to decrease it. So purchase will be decreased by $100. This is how the compensation or the compensating error will definitely be corrected. The next is purchases was overadded and the sales return was overadded. Beta, when purchases was overadded, it was on debit side. Sales was overadded, it was on credit side. So we will have to reduce it. Beta, when we reduce them, sales would be debited by $100 or by $1,000, and purchases would be credited by $1,000. Both were under added, they were overcasted, wrongly added. We are decreasing it. When we are decreasing, when sales is decreased, it is recorded on debit side. When purchase is decreased, it is recorded on credit side. So this is how beta we compensate our compensating errors, or when we rectify the compensating errors. Now here, beta, we have done all these errors. If I just give you a little review quickly, error of commission, when there was a wrong, when there is an error in wrong accounts, class sale, wrong account. Error of omission, entry was completely omitted. Error of principal, the error was due to the wrong class. Error of complete reversal, everything was right, sides were wrong. Debit was credited, credit was debited, so we had to make it in a double figure. Error of original entry, when the amount was wrong. If the amount was uh, basically wrongly written in addition, it was basically, then we had to subtract it. It was in less, we had to add it. It was all done. In compensating errors, two different errors. By mistake, by coincidence, there were two different errors which compensated each other out, but we had to rectify them. There is one more error which some teachers teach.